Hello and welcome to another episode of MoreTalk, where we record live. It's the only show in mortgage audio where not only can you listen to it like you are right now on Spotify and YouTube, please give us a subscribe, but every Thursday, use the hashtag MoreTalk, MoreTalk, to find it, and you can come on at 2 p.m. Eastern and
11 a.m. Pacific time on sunny San Diego.
And listen to us and raise your hand at any point during the show. We've had some amazing guests the last couple of weeks. We had, and I got to see her down at the state and local, but we had Tammy, actually 2 weeks in a row, and then we had Chrissy, both who have been on the board of the Tennessee Mortgage Bankers, both who run, one runs a bank, one runs an IMB. Andy Harris runs a great-sized brokerage. So just in the last 2 weeks, we've had some powerful people, and I'm happy to report back from the Advocacy Conference that Chrissy Ray won an award for her service to the mortgage industry. I'll try and work on getting that name. But I have some things to say about coming back from advocacy, but everybody's talking housing, and the NAR lawsuit, or I call it the settlement, really was the big focus. And we have some special guests on today. Sam Garcia, who is a mortgage news leader who I actually met at an ICE conference. So coincidentally, there was the ICE conference. I don't know, Joe, and we also have Joe Dahleen, who everybody in the industry knows as a technologist. Joe, were you at ICE?
Yep, I was there the whole time, yep.
So now we have one person from each conference that happened. So we got a lot of info. Can we dig in? Hello and welcome, Sam. How you doing?
Hey, I'm doing great. Thanks for having me on, Michael. And how's your fax machine business going?
It's a funny inside joke Sam and I had. I was selling mobile apps back at that ICE conference about 7 years ago. And I said, I think I'd make more splash if I went around and just sold fax machines. And then if they said no, try and sell them a mobile app.
Nice. You had me rolling the whole time, as you did everybody who listened.
I was role-playing with people and letting Sam watch and see if it worked or not. Sam, and you've always reported the news, so how significant is this settlement compared to other watershed announcements in the history of your reporting?
Well, I mean, I think a watershed announcement, I think of that $25 billion servicing settlement. That's pretty serious for the mortgage industry, right? Whereas right now, with the level of purchase activity, gosh, how much is it really going to have an immediate impact on mortgage originations? I'm not sure you could compare it, with something like those settlements that we saw in the past.
Somebody said it. I mean, there's a lot to be said. What were they saying, Joe, over at the ICE conference on? Was NAR a topic, or was it like the new cloud coming out for ICE?
Well, it was a little bit. Larry Summers spoke a little bit about it in the opening session and about what's happening. There was some talk that the DOJ probably wouldn't go forward with it and maybe not approve it. There was some people who were, thinking outside the box a bit that was still a little bit ways away from happening. But the vibe at ICE was pretty strong, probably better, probably more attendees than last year, definitely than last year, and very well run this year. Now that ICE is kind of fully in control, it was a very nice event. Again, it's Las Vegas, so you're kind of walking a long way, but nothing like those early days in San Diego. Remember that, Mike? We had to walk for just a century to get to all those places. But
or use one of your pedicabs. Yeah, that was great branding there too. So people think ICE is Ellie Mae. It's not. It's a large company that owns the NASDAQ and is into data. And I think they are licking their chops with this NAR piece, and I think that's where everybody needs to be careful. But that could be a 2035 problem. Disruption comes everywhere. What was the focus on the fact that Black Knight Servicing was part of that conference now? Does that change?
Yeah, no, that was. MSP was a lot of talk, and a lot of people that Lennar made a big announcement that they went on to the MSP. And so I think MSP has like 60% market share of all the servicers, right? Something like that. To see that happen and have them even get a new client come on board, like the size of Lennar, I thought that was impressive because typically, I mean, that is like a very, 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 I'm talking ancient old technology, right? Considering a lot of the high tech servicers that are out there today. But anyways, I thought that was kind of bigger news. But I think the vibe was really just about when they had the panel that came on right after Larry Summers in the main session, they talked about just preparing your business for the future. It's probably not going to come back in 24, but it's probably going to be more like 25. And I think Fannie Mae agrees with the announcement they just sent out. 6% mortgage rates are here for a long time, probably through mid-2025, right? So that kind of put a damper on some of the positivity that people are going to come back sooner than later. But it's the new reality, and you have to be prepared. And you got to have your playbook together, because when it does come back, you better be ready to go, right? You can't wallow around and wait 6 months to get your organization up to snuff and kind of classified for what you're trying to do. And it's going to be a purchase money market for a long time. So obviously inventory is tough. Builders can't build their way out of this. So it's going to be a tough inventory market. So I think that if there was any negative vibes about the NAR settlement, that one little bright spot that I did kind of hear of is that all of those lenders and brokers in California that have DRE licenses, right, probably are going to be the new lender and, possibly the buyer's agent. I think they're looking at that as being a potential opportunity. But on the negative side, there was some very positive things that were going on. But on the negative side, I heard a lot of negative things about SmartBeats. Since they're at a great, it's got acquired by CoreLogic and everything else. I heard more about that. It seemed like than anything that people are saying they're just not calling people back. I mean, there's no customer service. I don't know what the problem is there, but that was such a big, successful company for so many years, and now it's really having a lot of growing pains. So the other group that kind of competes in that area was the Lodestar group, and they were there, and they had a pretty good showing at their booth, and so that was positive. Not a lot of big POS booths, that's for sure. Be Smarty was there with their new featured out piece on their point of sale. They were right in the front when you came in, and they have this new social mortgage app, social business app, kind of like a social business card that kind of drags you into the point of sale. So that seemed kind of interesting, but not a lot of traffic at their booth. That's for sure. The Blend booth was like a little tiny booth, just a little tiny one. I mean, it was like, are you guys even at this conference? The big splash on the POS side was really, I think, Matthew Fossen from Absolute. Absolute had his big POS, thing. And that thing looked really good. And, being a POS connoisseur, right, I checked it out. I was very impressed. I was very, very impressed. Very transparent pricing, easy to get up and going right away. I think the biggest revelation that I saw was the presentation that week on Partner Connect. Remember, in the old days of Partner Connect, you only really had like 2 or 3 services that you could put on and put in. Now, everything is moving to Partner Connect. They have 147 partners now on Partner Connect. And they're saying by the April release of this year, like April 20th, I think they said, that there's going to be about 187 providers all on there. So no more SDK, no more anything. It's all Partner Connect. So that seemed very positive. And, the guys that were talking about it and the other lenders they had there talking about it, they were all very positive about how easy it is to get into Partner Connect and kind of make it happen. So that kind of seems to me to be like the future of the next wave of really what Encompass is going to be.
And Partner Connect is not the integration of next level technology, but drop downs of services, right? Or
that's right. Yes. All the drop down services. It's easy to connect, right? So before, like even just a year and a half ago, when I stood up the Consumer Connect while I was waiting for my other POS to come in, all it had was credit, Finicity, form free for assets and verifications, and they had the work number, but that was it. And now that was 4. Now they're saying they have 147. So everybody's kind of going that route, and that's how you're going to do it in the future. And so everything's going to be connected through Partner Connect for the vendor type stuff. So that's how it's happening. That's their future.
Before we break that down, Sam, what are you seeing? I guess I'll get a little raw here. The whole NAR lawsuit settlement is a story of the best way someone said it, and I won't say their name for now, but I'll give them credit later on if they want it. But there's just a lot of people in a housing transaction that make commission for being an expert, right? You have a buyer's agent, 1, seller's agent, 2, loan officer, 3. You could have a title rep, right? 4. I guess appraisers don't really make commission, but they make money being an expert. So when I hear all this Partner Connect and integrations and people, I mean, at the end of the day, ICE is making commission off of all of that as well. So the industry is running a lot around all these people getting commission for one housing transaction. And ultimately, as it moves more to data, it moves more ripe to be disrupted. And that's what I wrote about. I think somebody in the big data space seems to maybe be the person that's smashing this perfect system we had that worked. And now by smashing it, everybody's going to have to move around and become more reliant on data. Are you seeing, I guess, over to Sam, on the data side of the mortgage world, what are you seeing as changes as you've covered it over the years?
Just as we obviously are seeing, it's just a lot of the services we already use are incorporating it, and of course, offering a better turnaround. But, I wanted to kind of just point out that it's kind of an exciting period, because when you think about where we're at with this settlement, it's completely disrupting, like you said, the way things were. It's kind of even a little bit like the travel agents, remember, they controlled everything for the longest time, and all of a sudden everybody could go and get the information directly, find prices on their own. Kind of that's what's happened here. People can find everything about the neighborhood, about the price, about competing properties. And so the need for what the realtor does has changed a lot. So we're kind of at a period where I think there's just like so many different tangents that can happen from here. And you're going to have a lot of startups come in and trying all these different models, including the hybrid loan officer real estate agent. Maybe that is the future, where the loan officers do handle a lot of the stuff possibly, and, it gets incorporated into a fee. So I don't know. What do you?
We have Jay, who will be on later, who made a comment because Bob Brokesmith at NAC mentioned this, right? And I guess I'll save this for a little bit later, the details. But I did speak to an IMB owner of a good sized company, and he sort of told me off the record, real estate agents for years, a lot of them have convinced the consumer that they are the most important part of the transaction of getting the home. And it's rare that somebody can believe that without believing that it's also important to involve the person that's going to give you 70 to 90% of the money to buy it, right? And was speaking about how Gary Kelleher just a year ago gave a big speech about how to his agents, we are the dog and the loan officers are the tail, and they need us because 67% of referrals for them come through us. Well, that might not be the case anymore. And I don't know what the answer is to the case, but it's certainly, I think, from what I can tell, it's going to start with compliance and figuring out if just the interested party contributions. People are trying to be experts on Fannie and Freddie and FHA, but they really don't know the exact answer yet because this is all new. And so I believe it's probably what Jay was hitting at. But I think I'm getting back to, there is a possibility of like who blinks first a little bit. Like if the agents all start to go one way or the loan officers all start to go the other, it's like, can they all hold the line together? Yeah. And I actually trust the lender side to do it. Yeah. Will the real estate agents go first because they just feel like that's their world to take?
Let me give you an analogy, Michael. Like today, being a mortgage broker, right? The wholesale account executive is just pounding the mortgage broker, calling for business, right? It must be the worst job in the industry, being a wholesale account executive nowadays, probably. And they're just pounding the brokers to try to get business. Well, the same thing is true with the realtors, right? You got the loan officers, because the only thing out there is really purchase money business, unless you're getting divorced, right? And so they're all going back in there and they're calling on these realtors. A lot of them are out in the office. So you're pounding them a lot of different ways. They don't have any inventory and a lot of that kind of stuff too. And the question that they ask would be like, well, why would I give my loan to you, right? Why would I give it to you? It's like, no, you're not giving it to me. I'm helping you with it, right? I'm helping you get you paid. That's a good way of thinking about it. But they're always saying, no, I got my one guy. I can't challenge anything right now. I need to keep my normal process going because I'm only going to have one transaction this month, right? And it has to close. Otherwise, I got to stop my marketing or something, right? So just like the loan officers are pounding these realtors. So really, if you want business now from realtors, you have to give them the lead. So you got to find more creative ways to give them leads. And I was really very interested in understanding the kind of the new way of getting mortgage intenders or mortgage buyers by this concept related to geoframing. Has anybody ever heard of geoframing? Not geofencing, geoframing.
Never even heard of it.
Wow. Okay. This is very interesting. I'll give you some quick little insight. This group contacted me, my good friend Steve Myrink, who's the president and CEO of Wolters Kluwer's in United States. I've known him for 20 years, and he called me the other day and said, I should talk to these folks. Well, I had been working with them trying to put together this deck about how we could be on the front end of this piece in the mortgage industry by geoframing. So geoframing was really kind of came up by this one group that actually does it for Toyota. So if you walk into a Toyota dealership, they got your mobile ID, right? And so then they can tag you from 7 p.m. to 7 a.m. So now they're trying to figure out where you live. And when they find out your address, they also can find out your IP address. And so that's the trifecta, those three things. And so they can now digitally market to you, digital ad directly to you. They can digitally print to your house in seconds and it'll be there the next day. They can even track the mail digitally, how it came in that actually was delivered to their house and everything else. And they can even go over OTT. So your Fire Sticks, all your other type over-the-top TV ads that while you're watching your cable, they can serve you up an ad. And I thought that was really interesting. So think about this, geo-framing open houses. What would that do? As originator, I'm trying to get in front of the buyer before he talks to the real estate agent because I want to make that introduction, right? And if it's the only house listed on the block anyways, there's only one that's available to them, right? And God knows if it's been a remodel or fix and flip or whatever the case may be, it's going to go so fast because everybody wants a brand new home, right? So
Wow.
so geo-framing and understanding about who's intending to buy. So once you have this type of direct data that you can market to, now you're not just out doing social ads and posting things on Facebook and Meta and TikTok and everything else and trying to just canvas everybody. And when you do Meta and you're a mortgage guy, you can't really target, you only can target like a state or a certain area, but you can't do any kind of, demographic pieces because you're housing and credit. So that kind of screws you up, right? So it all depends what your strategy is, but that's kind of like a shotgun strategy. You put out a bunch of ads, hope people don't land on your landing pages. But if I knew that you were at an open house, right? May not be the right house for you yet, maybe you're not ready to buy yet, but that's the person I want. And I thought geo-framing was really interesting.
That reminds me of the Tesla model, right? People think that Tesla is an automobile company, but in reality,
Data company.
they're just an information company, right? Every time you drive a Tesla, they're gathering your cell phone information, your car information, and your, where are you going to go grab fast food and what are you going to do? It's all gathering information, right?
That's right. And that's why a lot of them are saying that's why your insurance, that's why, auto insurance has gone up like 23% this year, right? Because they're following you around, right? And they're seeing how well you are driving. I was talking with a friend of mine, an executive owns this company here that I sit on the board of, and he was saying, yeah, I'm in Allstate and it's on my mobile app, but what if I was to get in the car with you, Joe, and I have my mobile phone on me and you're driving like a madman? Does that affect my insurance? I was like, oh man, that would be a bummer, right? So I don't know. I think that's a scary piece too as well because they're tracking every move. I heard brokers were picking up that data and then selling it back to the insurance companies and jack your rates.
I wouldn't doubt it, but that's
scary. Scary is the right word, Michael.
That's interesting. Joe, I want to reference something. I'm in California, by the way. And you said, hey, maybe California people who have the Department of Real Estate licenses and mortgage licenses can do both. But doesn't, if you're really going to do that, and I don't think they're really going to do that, because if you're representing first-time home buyers, that's going to be a HUD violation, right? You can't do FHA loans and represent a buyer because HUD dictates that you're supposed to be able to, if you're going to do FHA loans, that is, that you only can do mortgage loans and you can't do anything else, or you shouldn't be doing anything else as far as that transaction. Different brokers or different lenders will define it differently. But according to what I think I've read, that if you're funding FHA loans, you can't represent the buyer.
Okay, great. So you, the loan officer that works in that branch, you're discovering that, okay, the buyer has to go an FHA. I'll be the representative to make the money on the buying agent side, right? But I'll give it to my other loan officer in the shop, just like the realtors do, right? They want both sides of both sides. They call them sides, right? So I want the buy side and sell side, right? That's what they do. They refer it to somebody else in their office, or they're a good buddy. So it's probably going to happen the same way.
I would call that, because I've seen this happen multiple times here in California, especially in Southern California. You know how they have straw buyers, someone representing someone, but not really, straw agents or straw loan officers, only because think that they're going to be doing two separate items, but it's really one person handling both. And I think it becomes a violation of the spirit of what it's supposed to be doing. And I don't think it'll be that big of an issue. It could be, but I hope it doesn't. As far as salespeople are concerned, if you ask them to figure out where, as f of x goes to infinity and figure out a parabolic curve, they couldn't tell you. But if you get them involved with a commission, they'll figure out real quickly what that is. Right.
Well, they're more innovative in California, which is say they'd be the first ones to do it if they could figure it out.
Oh, totally. 100%. California originators have been some of the most creative people as far as skirting the law or creating a gray area.
I've had my California license for like 20 years. So
Yeah, Michael, do you mind if I interrupt real quick? Because this is
Go ahead.
you're initially like, hey, will this happen? Yeah, even though it's against the law. Show me one time in history that the real estate community, mortgage brokers followed the law to a T every time. And
Exactly.
not white. So I have many thoughts about this. None of them will be friendly to people that are going down that road. But I have a simple view of this in that if I was building a house, I probably wouldn't have my plumber doing the electrical ever. I probably wouldn't have the guy that frames the house do my finish work. And so in this regard, I'm shocked. I had a post on LinkedIn. I think Kelleher, you saw it. I got some notes from the MBA after that. It was really nice. But when we talk about dual agency, all that means is we're back to square one, where the whole component of this NAR settlement, right or wrong, was that the first-time homebuyer was getting charged too much on a transaction, and they weren't able to negotiate. That's one innocent idea. The only reason you would do that is out of greed. But you're trying to maximize the amount of revenue you can get out of a first-time homebuyer who has no money. And so at the base of it, I have a big problem with this. Now, there will be people who will go down this path for sure. And all they will be doing is, if you're a mortgage broker or mortgage lender who already has all this liability and all of this risk associated with doing a transaction, and you're going to double this risk by trying to be an advocate for the home buyer as an agent, you're tripling your risk. For what? An extra 1% on a transaction? It blows my mind that people would even go down that path. I know it'll happen, but I can assure you of a couple things. There will be people who will be burned by this in a big way. And I'm just disappointed that loan officer and mortgage banks got their commission cut a few years ago when we moved to the new format. And realtor commission's been off limits. Well, now it's not. And so now a home buyer will be able to negotiate. And maybe they end up 6% is not the norm. Maybe it's 4%. Maybe Redfin's had this figured out this whole time with 1% agents. So it's a better deal for the consumer by far going down this path. Buyer's agents who are professionals who have a big sphere of influence and do lots of transactions will do very, very well. And the fly-by-night, non-professional real estate agents will not be doing business. And that's the way it should be. In my view, this industry needs professionals in every single trade. Again, when you're building a house, I want a Class A electrician, I want a Class A framer, I want a Class A plumber building my house. So a lot of people won't like that. But that's
That's reality though, Jay. That's great. Good. That's good. Thanks for being, transparent, because you're right. I mean, there's a lot of people who do not know what they're doing. They'll probably get into this certain kind of risk and they'll get sued once. They'll never do it again. Right. So, and you're right. You got to lower the cost for the first time home buyer coming in anyways. Right. And he's never going to get the new construction. So he's probably going to be more of an FHA, streamlined thing, because he has to buy the junker, because he's not going to get the new remodeled house because he's a first time home buyer. No agent is saying this is all fair. We're going to look at all offers on Thursday. Bullshit. I'm going FHA because I gave my pre-approval letter. You're out, right? I'm taking the cash offer, even though it's 20 grand less. So, that's just how it works, right? But you are also correct in saying that Redfin, they kind of have figured it out. If anything was a positive thing that happened in this settlement, is that Glenn Kelman, my neighbor up here in Seattle, he came right out and said right away, hey, I do not want to be a part of NAR. I'm out, right? What am I paying you for? And so now, what he's doing now? He's offering, if you use their buyer service, you will get a 0.5 point back at closing now. As a credit from Redfin.
You're right.
They may have did something.
I think too, and this might be, I don't know if this is popular or unpopular. To me, it seems like the seller's agent does a lot more work that would require experience and professional separation between the best and the worst, meaning you got to know exactly what to price, which is such a math, then you got to know how to market the property. On the buyer's side, and maybe it's because I'm from an attorney state when I originated, but if you had a closing attorney, they could do a lot of help on the legal side of what to write to protect the buyer. As far as showing the property, it's not like arriving in a Tesla is any different than an Oldsmobile when you look through it, right? Like when you're representing the buyer.
Yeah, no, I would agree with you, Michael, as well. I mean, I think that what I found out from sellers agents, I've owned 18 homes myself, but what I've always found out from selling agents is that they really don't want to tell you about the plans and the problems. Now they have to give you that disclosure in the purchase agreement, right? But it's really up to you. It's really up to you to do your own inspection, right? Because not everything's going to be on there because it's what it's what the seller told them that I need to disclose in my purchase contract, right? So a lot of times they don't know that there's a huge problem at the foundation, or they don't know that there was a landslide coming down the back, on those hills in California when the big floods came through Montecito, right? I mean, nobody told them that. So I don't know, but that's a good point.
For someone who's invested into property, and you're right, Joseph, they're looking at multiple title issues, they're looking at land issues, they're looking at whatever, height restrictions or zoning restrictions. Was there eminent domain on water rights, or if someone wanted to buy land? I mean, or was there some other effect that's not allowing you to go 20 feet deep versus owning the infinity amount of land? I think there's not enough experience. The problem with the industry right now is you got newbie people getting licenses, and the first thing they do is represent buyers. And then they move into listings because as soon as you get the listing and you do your background work of what you do need to do as far as marketing is concerned, as far as looking at maybe that agent's going to look at and read the title report and actually understand how to read it, they set it and forget it. It's easier to be a listing agent than a buyer's agent.
You need to demonstrate to you on the buying side, because a buying agent does like 120 tasks to help this transaction get closed. Yeah, or more. I think they do a lot more work in the transaction than the selling agent, because the guy already got his listing, he got his price, it's on the market, let's go, right? There's not really too much stuff to do there, I don't think.
The listing agent and the buyer's agent both contribute a lot to the transaction. And there is when you have the best people, highly qualified agents on either side of a transaction, there's clearly a wide divide of talent and experience level out there. And it's that wide divide which calls the value that an agent provides to a transaction into question. Now, does that mean that every single listing agent should get paid the same amount or should be able to negotiate the same amount or the same on the buyer side? No, because there's different quality of advice, different quality of service out there, which might be a good thing for why we're talking about compensation right now. But it does drive me absolutely nuts when the contributions of a buyer's agent as a total class get called into question, because there are so many value-add real estate professionals out there that should earn way more than they do in some transactions, because some transactions are extremely hard.
Yeah, that's an excellent point, Clayton.
That is a great point, Clayton, for sure.
Nailed it.
Yep, absolutely.
Yeah, it's the generalizations are hard. It's just infuriating to me right now to see some of the messaging out there. I mean, I blew a gasket yesterday listening to the New York Times daily podcast as they send this consumer message out there that agents are all a cartel who've been stealing from consumers, and that now housing is about to become substantially more affordable because you can negotiate agent transactions. That is what people on the sidelines in the housing market are hearing right now. That is the message that first-time home buyers are hearing. So now what are they going to do? They're going to sit around and wait as home prices continue to go up, and we're going to see some improvement in interest rates in the coming year, and that's going to translate directly back into more home price appreciation. And the dollar amount that a homeowner pays on a new mortgage originated in 2024 or 2025 is going to be no less than the mortgage payment paid in 2023 or 2022, because this is an economy, and when one lever moves up, the other moves down, and it's a lockstep pricing mechanism, in my humble opinion.
Tell me how you really feel, Clayton.
Yeah, I've been a little bit pissy this week, Jay. I get really frustrated by misinformation that's hitting such broad audiences. I heard a story yesterday from a family member of a person I was talking to here in Dallas, that they had a buyer walk away from a home purchase yesterday because at the closing table, the real estate agent refused to adjust their commission. So a buyer had the gusto to ask for a reduction in commission at the table yesterday because of the settlement on Friday. I mean, this is just stuff that's not founded in reality.
Hyperbolic BS. But I mean, I've sold a lot of houses. Not once have I paid 6%. Not once. It's always been negotiable. But
It's always been negotiable.
It's correct.
yeah,
That's what I'm hearing from all my great agent friends, especially the ones in California. They're all like, this is not going to change. It's always been like this.
So the West Coast, if you look at the data, the West Coast has always had more negotiation than the rest of the country. Or the people on the West Coast have been more successful at negotiating than they have in other parts of the country. That does start to reverberate through other high-priced markets. So, like, when we hear that, like, I've always had a lot of success negotiating, it's usually from people in California and other really high-priced places. But here I am in Dallas, Texas, and I have also never paid 6%. So, folks, it's negotiable.
you know, once you get past all the BS on this, like it dawned on me, here's what I think is going to happen. And there's the agencies aren't ready for this, VA, FHA, et cetera. But when you look at what was the commission before on real estate transactions, it was actually a seller concession. The seller was saying, here's some money, knock off the purchase price and pay everybody. Well, we allow seller concessions today already on transactions. And so it will be allowed because a buyer can pay a realtor using interested party contributions from the seller. And so maybe the buyer's agent, commission comes down. Maybe it's not 3, maybe it's 2, maybe it's 1. But more cases than not, it's going to come through a seller concession. Now, there's 2 things that the industry has to sort out. And once you get to like a 97% LTV on a transaction, the amount of seller contributions is limited. Mm-hmm. And so that'll make it harder, again, for who? The first-time home buyer that's trying to pay 3% down. And the other just elephant in the room, you can't do that at all on a VA transaction.
That's right.
At all. So guess what we're going to do? Hey, I know you're a vet. You did a lot of things for our country, but you can't buy a house today. Or you're going to tell a buyer's agent, you got to come. These guys are no money down. They got to come up with 1 or 2% to pay the buyer's agent. That ain't going to work.
No.
So the agencies have to come together on this. This is, again, I remember, and you guys all remember when TRIG came out, and all the loan officers freaked out. Oh my gosh, my commission's going down. I'm never going to make any money again. And guess what happened? They made more money than they ever did. And so I think cooler heads will prevail here. And to Joseph's point, fintech will get involved. They'll do a bunch of things. They'll automate stuff. The Redfins will survive. But I truly believe that professionals in the business will sort this thing out sooner than later, and we'll get to some sort of a middle-of-the-road approach to this thing. And again, 6%, especially like a 6% on a $100,000 house is a lot different than 6% on $1 million transaction. And so you start doing your hourly wage on that.
Jay, just like you're saying too, I mean, here in Seattle, like we're thinking about moving back to Southern California. All the kids have moved out and they're on their own and we're empty nesters. So let's go back to the beach, right? Geez, in Washington, it's a graduated scale now, the excise tax. So it's like paying another realtor. I'm just paying the state of Washington. I think on my house, if I sold it, I'm going to have to pay 2.25% because it's all based upon the sale price, right? So it's a graduated scale. And that's like having another realtor, except they're not involved in the transaction at all.
Joe, that's crazy.
Yeah, it's 2.25%. So on $3 million, that's a lot of dough.
And since Clayton aired out all his grievances, I'll air out one more too. And so, the thing that's really shocking to me on this whole thing is the industry is focused on this topic right now. Instead of talking about the CFPB, talking about lender fees being junk fees. Here we have the CFPB saying, you mortgage bankers are making way too much money. All these junk fees you charge are affecting the first-time home buyer. Well, the simple fact of the matter, there isn't one IMB that's made any money the last 2 years. And we're like, you get rid of that fee, now what happens? Like, the industry has lost its mind. And thankfully, we have something like a housing wire that's like actually like telling people what's going on, because I can tell you, you didn't hear about any of that at ICE. Probably didn't hear anything about that at the MBA. No. Like, it baffles my mind that people that say they care about the industry don't talk about these things. It's just, anyways. So Clayton, I just had to say what's on my mind too, since you opened up the Pandora's box.
Appreciate it. Glad my anger is it's contagious. Jay, go a little deeper on profitability by lender. One of the things I keep hearing is that it's a tale of of two markets, and there are players who are running profitable models right now, and others that are, sucking wind a lot worse than that average number. What's your view?
Well, so a lot of the data is public now. We've got mortgage companies that are public, which is helpful, so you can kind of see what they're doing. And the two big ones, you saw their earnings, and you can figure out what they've done for the last year. So yeah, I'm operationally profitable, but what I had to do was take a servicing write-down of almost $1 billion on my book.
Right.
And what does that tell you? What they've done for the last year when they were pricing through everybody is inflating the value of their MSR in order to make the price look better. And guess what? At some point, accounting catches up to you. And so it blows my mind that a company like Rocket, who is doing umpteen billions of dollars of loans and losing $250 million in a quarter, why in the heck would you do that? That makes zero sense. So then you take, whatever scale that is and apply that to every mortgage banker in America. There's your math. Now, the companies that do okay are people that have a servicing book and are small enough and kept their framework such, their corporate expense down, where they can do $30 million a month and actually make a couple bucks. I mean, but it is, look, we do okay because we're pretty conservative and we don't get ahead of ourselves, but it ain't easy. I mean, the margin compression, because there's still too many players in the space, is still very much affecting every mortgage banker in America. And then you have really irrational players at the top of the house manipulating, accounting statements, playing with GAAP accounting to make their numbers look good. I mean, so here's the thing. I think back in January, February, everybody thought there was this, we're getting a break, rates are going to come down, everything, we're going to buy our way out of this thing. Well, outlook to me looks like we're in the sixes for the rest of the year. So now what does that look like for these firms?
Right.
And to top it all off, if the CFPB gets their way and gets, starts, telling me I'm charging too much money again, we're going to be back to having Amazon running mortgage, all of it, next year at this time. So my owner, he's been around 40 years. I'm like, have you seen anything harder than this? He's like, nope, not one, not 94, not 08, not any of them.
I would agree. The comments from ICE was that, in the one presentation I saw that was with Prosperity Mortgage and AmeriHome and the gal Maria Forgazio, John Hedlund kind of said it best. He's a correspondent at AmeriHome, right? And so he says, this has been the most brutal 2 years I've ever experienced. And everybody agreed.
Great timing, John. Congratulations.
Is that what makes him smart?
Yeah. I didn't see that.
It was after the speech, Joe, actually.
Oh, shit. That's hilarious. Oh,
yeah.
God, that's got to say something. Wow. That's something.
I do want to say one thing. At the advocacy conference, Senator Katie Boyd Britt, who was the one that Scarlett Johansson played on SNL as the rebuttal to the State of the Union. She's a state senator out of Alabama, and I will say the way she speaks comes off much better in person than over video. And she's young. Owen Lee from Success Mortgage raised his hand and pointed out how the CFPB provides regulatory clarity through enforcement or announcement and no actual guidelines, and then went on to talk about this blog post where they go about calling junk fees appraisal fees, which are third-party fees, credit reporting fees, right? And discount points, which have proven, obviously, with rates going up, that's why there's been a rise in discount fees. She gave a chuckle, and she just said, Chopra, yeah. And she talked about how, she went into detail about how a senator from Massachusetts went in and asked if they need more regulation after they all answered, could they have done more? We'd have to look into it. Did everybody do their job? We'd have to look into that. And then from my state, she goes, it sounds like you need more oversight. And they said, yes. And so she went to him and said what you guys probably expect. Let me get this straight. You don't know if everybody did their job. You don't know if you did the best you could. You have to look into it. But you want more power. This is the problem. And then she joked about how she started to look into this person, Chopra. I hope I'm pronouncing that correctly. And she's like, he's the same, I wanted to say, like, where is he from? How did he get, like, who is this guy? How did he get here? How old is he? She's like, turns out he's he's only 3 days different than me on my birthday. So I called him into my office privately. And she really went into how she does see these blog posts as a problem, and how oversight is a huge problem in our industry that is keeping homeowners, from getting into homes. And usually they have to go. Like, that's the biggest thing I learned from DC. They always have to go somewhere. She stayed and she answered questions, and she just said, yeah, like trigger leads sound awful, and just kind of got a couple standing ovations from just talking real. But she definitely did talk about that, Jay, or you'd be happy to know whether the MBA did. A state senator actually went into deep on that piece.
Yay. At least somebody opened their mouth. I appreciate that.
Nah, that would have been good. That was probably the highlight of the whole show, probably for you.
The congressman from Pennsylvania was up speaking, and during questions, Eddie Perez from EPM just called him out, didn't even ask questions, said, will you support trigger leads? And he said, yeah, we're definitely going to do that. And he looked over, gave a signal to his person, and then an hour later, Bill Kilmer reported that he was now signed off on trigger leads. So sometimes you just got to ask.
All right, gentlemen, it's been fun. I got to run. Thanks for letting me air my frustrations, and hopefully add a little bit of value.
Wow, that Kate, yeah, that was great. That sounded like that. Wow, that would have been awesome. Did somebody film that thing? I'd love to see that.
It was really awesome. I don't know if, it's closed to media. I don't even know if I can say it then, right? Not yet. No, I'm not media.
Mike, I got a jam too. Is there anything else I can add to the discussion? It's been a pleasure.
You said it really well. I never thought they had like a set commission. I think that world is a little bit ready to change, but I think it comes down to more what you're talking about is figuring out what interested party contributions are, right? As somebody that was in a very regulated congressman and congresswoman groups, the fact that Fannie, Freddie, and FHA do not allow commissions to be added to the balance of a mortgage, so investors can only lend against the asset. And if that fee is no longer part of the purchase price, then is it an interested party contribution or not? And I think that is, everybody's kind of just hoping the mortgage industry figures it out. And I just feel like sometimes when we do figure it out, then we get punished for not following the rules when we're the ones that came along and really helped everybody.
If a municipality or a city says, hey, you know what, we're going to charge you a property tax on top of your purchase price plus those commissions, then would that be technically saying, oh, it's part of the purchase, right? Because they're being taxed on not only the purchase price on the contract, but also on the commissions itself, adding to that. And so if you, maybe the agencies don't get it right now, it's always a day late and a dollar short, but maybe if the city's saying, we're going to tax you on, tax the new buyer on that commission amount, maybe that there can be a restructuring or reframing of how they can now finance those commissions inside of the loan itself.
I doubt it. Okay. Maybe. Jay, I got one. I got one for you, Jay, real quick before you leave. There's a strategy out there now incubating first-time home buyers, right? And there's a couple of little fintechs that have come out and done a really good job of putting this program together. One of the ones that I saw that was really kind of very attractive, what it did was a gamification piece. And every time the borrower would do a certain amount of things, connect their bank account to the savings or pull their soft pull credit report, which was a real FICO 4 model, they would earn dollars in their account. This would be paid for by the lender as a closing credit to the buyer, right? So you could go up as high as 1% of a purchase price or something to that effect. They could put a little limit on it. But now, could a broker do that? Could a broker credit back the buyer if he's only getting lender paid comp?
Nope.
I didn't think so.
Yeah, that sounds like a great idea. I have no idea how to administrate that. Somebody will sort it out. But what you're hitting on, though, is been the keys to success for a loan officer since I was a loan officer. We're in that if you can source a home buyer prior to them engaging with an agent, you have the pot of gold. And I think
geoframing, buddy, that's what it is.
Yeah. However you're talking, I mean, it's scary technology, but look, I'm going to say something that's to be offensive. There are a lot of loan officers that understand real estate way more than a buyer's agent, right? But there's always been this, the agents control the transaction. If the loan officers can control the transaction, bring buyers to the table, it changes the dynamic. It really does. And so, and it's like the other thing, how many times, and Greg Sherman and I were laughed about it, how many times have we told our loan officers to follow up with the listing agent and they don't, right? When guess what you got to do today?
Right.
Listing agent. So technology will figure this out. Smart people will figure this out. I wouldn't rely on our agencies to figure this out quickly, but I honestly, in my heart, I think this will be much ado about nothing. And next year at this time, we won't even think about it. So
one of the big things they were talking about was page 28 of the 100-page settlement. NAR is now saying you can't go see a property without a buyer's agent agreement, which I don't think is in place today, right? So that would help them prevent. That's why Zillow's stock was down 12%, because they know that if that goes away, then you can just go on Zillow. And I think that, but also that
It's not going on Zillow anyways.
Yes, framing it's at least helps them protect against the Amazons, and I think if that place stays in, it sounds like there's a better chance it would be more status quo, and therefore you really want to stay away from the dual agency.
Michael, thanks for tackling the problem. Appreciate you.
Yeah, thank you for coming. All right, well, any final thoughts, Michael and Joe? I mean, this was an awesome show. I don't even know where to turn the wheel from here. My final thoughts are, whatever this is has the potential of being smashed. Whatever was codified within the status quo for the last 50 years, if that is smashed, we do live in a world now where startups can start creating stuff. And I think that's where things really get shaken up, not on the streets in a handshake, at MIT, at Yale, at Stanford, at those type of places with the data available through multiple sources. And I'm sure at the ICE conference, there was a lot of people selling data. Those are the people that are going to really maybe cause some problems to the way it was.
Yeah, you're right. There was a couple of very interesting conversations around data and how many people will be changing jobs and how they're going to bring their databases up to snuff when they go to their new place. And that will become like a service that the lenders are going to offer in their recruiting package. Like, give me all your past clients. You can't take it from your old employer, but we know all the ones we already have all the data, the people that you close loans with. So we got that database for you. Now you need to think about all your prospects that you keep them yourself, right? You can't steal them from another company, but we can flush your whole database for you again and market it for you. So it's pretty interesting. I thought that was a really unique way of attacking all these changes that are happening, right?
I think if you want to be able to really make some change, you fractionalize the leadership, which is basically what this lawsuit is about. Putting legal restrictions on NAR by having them settle. And by the way, according to the settlement on the NAR website, that this actually still hasn't gone through the court yet. But this is the opportunity right now for mortgage professionals at the C-suite level, at the leadership level, to sit there and go, okay, now that realtors or the organization seems fractionalized, we need to be able to step up, because one of the things, and you guys addressed this at the very beginning, the seller's agent, the listing agent has a lot of power, but then really it's the mortgage professional, the loan officer, the originator that comes in when the property is in contract, that takes dictation of, okay, we're controlling the appraisal. Tell me what, whether it's VA or FHA, tell me what the inspection says, tell me what's going on here so we can communicate with everybody. And they take over the quarterback position. I look at it as this: are you the sous chef or are you the main chef? And right. And really, to me, the listing, the agents become the sous chefs, and then really the originators and the money people are the really performing the duty of serving up the main course, which is the money you need to borrow in order to make a purchase of what is arguably the largest transaction of most people's lives.
Well, I mean, that's a very good point, Michael. That was, for not being an originator yourself, I think that was a very good point, because think about this. The things that I've been seeing happen here recently is those equity share type components. They're going to give you the money for the down payment. They're going to share in the equity on the upside on a 5-year plan. That one in California sold out in 14 days that they put together, right? And they only let certain lenders have it. So that was kind of bullshit. But there are some private ones that are coming up. There's a few builders that actually had put some funds together. And I'm meeting with the CEO tomorrow morning, actually, or next Friday, that put one together. And he's not only just the CEO, he's also he's his own builder. And so he'll give you 10 or 15% if you can come up with the other part of it. But you have to have 20% down, so there's no MI. And it's an equity share, and it's a brand new home. So basically what they're saying is that, hey, listen, we'll give you the 15%. There's no payments for you, right? So you don't have any MI. You don't have any second mortgage payment, right? And therefore, we can get you great financing at 80% LTV because you'll have this big down payment. So that's kind of interesting. And if that's the case, and I'm the loan officer and I have access to that program, holy crap, every realtor is going to be like, buying me lunch if that's legal.
Well, yeah, but now you're going to have licensing issues, right? Because are you selling equity or are you selling more money? And I think
No,
that's
I'm closing the loan. I don't get paid on the equity share. I'm just closing the loan. I'm going to use an equity share program. It's just like a down payment assistance program. I don't get paid on those.
I'm looking forward to seeing more of that. I was talking, I've had conversations with Mark Hansen about this, and after going,
but he wants to do it for home equity for seconds and in HELOCs. That's his plan. This is for purchase. I think that's really innovative.
Oh yeah, and it's coming. And when it comes, it's gonna hit everybody like stated income.
One interesting takeaway I had that I wanted to say earlier was Jay made a point. You wouldn't go, and I used to do this as a loan officer, but you wouldn't go to an architect to do your plumbing, and you wouldn't go to a plumber to do your carpentry. But the big shift here is there are more consumers that are going to YouTube to do the plumbing. They're not asking the plumber or the carpenter. They're actually doing it themselves because YouTube has allowed them and empowered them to know enough to be able to do it. Another fact I heard from Tony Thompson's presentation, they did a big study, and 92% of first-time home buyers started their mortgage and real estate journey on YouTube. And so this is where it is going. It's all going actually to YouTube, whether people are already on it. They're on our talk, MoreTalk. Please give a subscription down below. But that's where they are. That's where they think about it, and that's where they go. And I think, that's my takeaway. As more YouTube comes out in any occupation, so this isn't a knock on buyer's agents. This happens to plumbers. This happens to everybody. The more YouTube is out, the more a consumer can do your job if they just watch enough YouTube on it as they're doing it.
I think you're right. I think here's the thing. Look at who the first-time home buyers are. They're females at 35. That's the majority of them. Because the dudes aren't smart enough to figure it out, or they're wasting their money traveling all over the place. I don't know what they're doing, but the women are crushing it, right? And what do they watch all the time? HGTV. So they think they can do it themselves. I'm saying that first-time home buyer, she's never going to be able to get a brand new construction because there's no inventory for those. And if she does, she's going to be waiting a long time before she buys it, right? Because she'll have to buy a year before it's even built, right? But if that's the case, then why wouldn't the FHA 203K program be super huge for these folks? Because now they changed that program, I think at the end of April. Who knows with the lady quitting her job after Biden makes some stupid announcement, but the HUD secretary. But basically, they changed the FHA 203K streamlined to now you can get $50,000, not $35,000 to fix up your home post-closing after the deal closes. Then you can go fix up your home. Or if you're in a high market area like San Diego, you can go up to $75,000. So that's really interesting. Now, if I was a first-time home buyer and I was trying to build equity for my next home I'm going to buy, right? That's what I would do. I'd go get the FHA 203K, small down payment, come in with a lot of construction money, and finish the thing after I close. Now, that would be bitching. Because, you could do a lot of the work yourself. You don't have to hire the contractor. You do need a contractor bid to get the thing approved, but that should be pretty popular.
Michael, how are we doing on time?
We're up on time, but I like the 203 YouTube loan.
Oh, my.
Well, I just did all the content for 11 episode series, Michael. So I was thinking about doing the whole series and putting it together. I have 11 episodes written about how to do it, all like 30 seconds to 60 seconds or less. For
it's such an underutilized product right now that needs.
And it's not difficult anymore. It's really not difficult. It used to be a pain in the ass. Now it's really easy.
I think it's easier than Home Ready, actually.
Oh, yes. I think you're right. Well, especially if you do, because you got to have an inspection, right? So if you use Inspectify, when Inspectify here in Seattle, if you go have them do your home, then instantly you hit one button and it turns it into an online quoting system. So basically it tells you that the roof in San Diego and Del Mar is not $8,000 that you're expecting. It's going to be like $28,000, right? So prepare yourself for that if you need a roof, right? Because if the inspection says that the roof life is less than 5 years, you've got to do that, right? So this instant inspection turns into an automated calculator bid for home equity loans and for 203K loans. It's ideal. I mean, look at the largest user of Inspectify customers is that Kavi, and they do like 1,000 inspections a month on that platform. That's what they do. They build it into the calculator because they know the fix and flip guy is saying, no, I can do that roof for $4,000. No, you can't. No, you cannot. We know the size of the roof. We got the pictures of the roof. We're telling you it's going to be at least a $13,000 roof. So
yeah, and given the lack of inventory that we have right now, this is like the perfect loan to pick up for someone that says, you know what, screw it. I don't care what the rate is, and my wife's giving me a hard time. Just let's fix up the house. We have plenty of equity. And since MI rates being as low as they are, if it's below 60%, just like, you know what, let's just do it. This is cheaper than getting a line of credit at 9%.
That's absolutely right. And you can close on the house first, and then you can fix it up. That's the bitching thing about it.
Oh yeah.
And realtors will.
Well, I guess join in the comments maybe some ways that our listeners could look into this, and maybe we have a show if there's enough requests in the comments. A couple subscribes on YouTube here and Spotify. Please comment 203K, and we will do a separate show for you on it. I'm going to land this plane here on MoreTalk. It's been an incredible variety pop-in hour like never before. And Joe, you really, I think, helped carry it and bring a level of sophistication from your ICE experience to your origination experience to just knowing what was moving and shaking. So we appreciate you staying the whole time.
Yes.
All right, great. Awesome, guys.
Thank you so much.